Welcome to the third video in our series on CMSL. In the first video, I told you the 7 points you should keep in your mind before you study CMSL. In the second video, we had an overview of the entire capital market, which is for 60 marks. Now, this is the third video and we will be doing overview of the security laws, which is for 40 marks. What should be in your mind before you study every chapter of security laws? Yes, the first thing you should know in security laws is first point, it is all about the procedures. That is, what is the procedure for the registration of intermediaries, what is the procedure for takeover, what is the procedure to avoid insider trading, things like that. Second one is offenses. What are the offenses under the act if you don't follow the procedure? The third most important thing which should be in your mind when you study security laws is it is all about the rights of the investors or the protection of the investors. And fourth one is the penal provisions, that is, if you commit the offense, what is the penalty or the penal provisions. Please keep these four things in mind. Now coming to the chapter which is relating to regulatory framework of stock exchanges and SEBI. So first I will be telling you chapter 17 SEBI, then I will go to chapter 16 regulatory framework. So SEBI is one of the important chapters in part B. So Securities and Exchange Board of India. So in this chapter, what should be in your mind? First thing is that SEBI is for protection of investors. Second thing is that SEBI is for promoting development of the securities market and SEBI is for regulating the securities market. So these are 3 points we should remember. So if you know that SEBI is for protecting investors, then to promote the development of the securities market and to regulate the securities market, you will understand all the other things which is there in SEBI related chapter. So what else do we have in this SEBI related chapter? What should be in your mind? Your mind, you should have the word of investor protection. Investor protection is what is very important. After investor protection, there are some regulations for registration. So registration, you should know that. Then what is the dispute resolution mechanism? That is the third most important thing. Dispute resolution. So if there is any problem, what should we do? We have the Securities Appellate Tribunal, SAT. Then we have the special courts, correct? And that special court is for what? It is for speedy trial. So these are the things which you should know. So here what we will have to understand is that in this investor protection and regulation, we have to know that the SEBI chapter is also about dispute resolution, that is the SAT and the special courts. I told you now already relating to chapter 17, that is Securities and Exchange Board of India. What should be in your mind when you study that chapter? It is all about protecting the investors, correct? Now we will come to chapter 16. Why I did chapter 17 first is when you know SEBI, you will understand the regulatory framework of stock exchanges. So this is chapter 16. So in this chapter 16, what should be in your mind? So what are we doing? We are not doing a summary. We are just doing what should be in your mind. What is the one or two focal areas? What is the core point of each particular chapter? So in this chapter 16, so the first thing which you should know is you are going to study SCRA, Securities and Contract Regulation Act 1956. So this is the core which we are studying in regulatory framework of stock exchanges. So obviously when we study SCRA, we study little bit history, then why we need regulation for stock exchanges. I already told you in part A, capital markets, I told you about intermediaries, then stock exchange is one of the intermediary, all that you have an idea. So that is in our video number 2. You can watch it if you are watching this video first. So in SCRA, there are primarily 3 points which you should know and what should be in your mind before you study this particular chapter. So what is the purpose of this SCRA? The first thing is to prevent undesirable transactions. So what do you mean by undesirable? So any transaction where there could be fraud involved, or any transaction which is against the principles of security laws, any transaction which is against the SEBI guidelines, or any transaction which is insider trading, any transaction which is to fraud the investors. So all this will come under the SCRA. So please remember, entire Securities and Exchange Board of India, SEBI, which came into picture in 1992. Some of you may be born after 1992. So here, what was the purpose of SEBI? Because of the Harshad Mehta scam. So Harshad Mehta scam was there, and that is why the SEBI came. So the main purpose is to protect investors. So if you have this in mind, if the SEBI purpose is to protect investors, you can write any answer because this is the background. So SCRA, once you know that SCRA, the Securities Contract Regulation Act, is to prevent undesirable transactions. The second thing is to regulate the business of securities. So regulation, SCRA is for what? Regulation of business of trading or securities, correct? That is the next thing which you should keep in your mind. Then the third thing is that which we study in SCRA is relating to the powers of the stock exchanges. What power stock exchange have? How much penalty can they impose? What are the rules which they can frame? What is the powers of the SEBI? All these kind of things you will get in your Securities Contract Regulation Act, which we study primarily in our chapter number 16. So now that you know chapter 16 and also 17, I did 17 first, we can go to chapter 18. What should be in your mind when you do chapter 18? So what is chapter 18? It is all about depositories. Depositories, correct? So you know this very well already. What is depositories? It is basically the place where we keep all the shares in electronic form. So for you to understand in a simple way, you can think of it like a bank. So each one of you may be having a bank account. So if you have a bank account, you will put money in the bank. Suppose you put 10,000 rupees in the bank, you are not going to touch the 10,000 rupees notes or something. But if you want to transfer 1,000 to your friend, you can transfer it. It is an electronic form. And now you have so many apps like Phone Pay, then you have Paytm, etc. Similarly, you think depository like a bank. So all the shares will be in fungible form. So when we say depository, so the first thing which should be in your mind is there are only two depositories in India, that is NSDL and CDSL. Then the next thing which should be in your mind when we study depositories is that the shares are fungible. What is the meaning of fungible? So they don't have a unique number. So to give you example of fungibility, suppose I have 2000 rupees note. Okay, I have a note for 2000 rupees. Now I have to give you 2000. So if I have give you 2000, I'll give you this note to you. Okay, you have taken a loan from me. So how much? I gave you 2000 rupees note. So after some days, you give back the same 2000 rupees worth to me, but you are going to give me in 20 notes of 100 rupees each, which is equal to again 2000 rupees. Will I say no? Will I tell I gave 2000 rupees note and the note number is so and so, so you have to give me the same note? Definitely not. So that is why we call money is fungible, correct? Money is fungible. That is, it can be exchanged. It need not be the same note you should give back. So when you repay the loan, you don't have to give the same 2000 rupees note which I gave you. You can give me 100 rupees 20 notes, or you can give me 500 rupees 4 notes, whatever you can do, correct? But in depositories also similarly the shares are fungible. So shares are fungible, they don't have unique number, they're interchangeable. But when we talk about share certificate for unlisted company, private company, there what happens, there is a unique number. There is a unique number for every particular share certificate and every share. But here in depositories, it is in fungible form. So if you know this, everything else you will understand in a easy manner. So if you know that, we have to study the Depositories Act. So Depositories Act will be there, which is very easy for you to understand. So this should be in your mind when we study chapter number 18. So then we'll come to chapter number 19. So what are we doing? What are we doing? Don't forget what should be in your mind. Correct? What should be in your mind when we are studying this particular securities laws for 40 marks. So we finished chapter 16, 17 and 18. The 19th chapter is about listing and delisting. So yes, there are many rules, many guidelines, many regulations, and everything looks the same. So I'm not going into deep. I'm just doing this video because many students are telling that it is difficult. I'm not understanding what is the subject at all. So this video may help you to, at least before start studying, what should be in your mind before you study every chapter. So in listing and delisting, what should be in your mind? First thing is about liquidity. See, if you are an investor, you invest in land, you invest in a piece of land, you put, let us say, 10 lakhs money in the land. Here the problem is it is not liquid, it is not easily marketable. There are multiple factors like demand, supply, then land laws. So it is very difficult for you tomorrow. Suppose you suddenly want money, somebody is in the hospital or some purpose like that. So that time this 10 lakhs is very difficult for you to sell. But the same thing, if you have put 10 lakhs in shares, you can buy today, yes, and you can sell tomorrow. It is as simple as that. So in listing of securities, when any shares or any securities are listed, the biggest advantage is liquidity plus marketability. Liquidity plus marketability. So liquidity plus marketability is the advantage, and that is what you should know in this particular chapter. Then when there is listing, obviously the procedure for listing you have to know. So you will understand that there are some steps involved there. Then what is the procedure for the effective management? Effective management of the trading. So once shares are listed, there is a procedure for effective management. That is what we study in this chapter. Apart from that, the most important thing is listing agreement. So when a company lists itself on any stock exchange, there will be a listing agreement. So for you to understand this simple, suppose you have Flipkart website. Okay, now suppose I want to sell something on Flipkart. So Flipkart will make me enter into an agreement, not listing agreement. It is just a normal sales agreement or something like that. So that will give the rules. What is the commission which Flipkart will take? Then what is the delivery, who should deliver the goods, then what is the quality of the products, then what should we do when there are any complaints. All these rules will be in the agreement, correct? Same way, if I am a company, I want to sell my shares, I will list it on the stock exchange. I will list it on the stock exchange. So when I list it on the stock exchange, there should be agreement between stock exchange and the company, correct? So that is what we call as the listing agreement. So if you have this basic idea, you can understand what all you can see in the listing. So listing, along with that we have the delisting also. And in this listing, corporate governance is the next thing which you should know in this listing and delisting. So in this, what do we study? We study the SEBI LODR regulations. So we have this, so you should know it's about corporate governance. So job of company secretary is to ensure highest corporate governance or highest standards of corporate governance. So that is why we have to study this in detail. If you have this in mind, then it will help you to start studying this particular chapter. Then we have 20, issue of securities. So this is a very important chapter. So according to me, the first important is chapter 17, which is SEBI. Then it is chapter 20, issue of securities. So in issue of securities, what do we study? First thing you should know, issue of securities is nothing but the offer. Once we offer, we also call it as the prospectus, correct? Whatever we have offered, the document is called as the prospectus in listed company, offer document or prospectus. So this whole chapter is about how you should make the offer, what should be the price of the offer, then what is the restrictions relating to what you can make in the offer, what you cannot make, and what is the rules as per the ICDR regulations. So SEBI ICDR regulations will come into picture here. Then we also study about the procedure. What is the procedure for the issue of securities? That is, how do we make the offer? So what we should understand in this entire issue of securities, we are only making the offer. There is no acceptance here. So we are making the offer. So after the offer is made, then the investors or general public will accept it. then they will pay the money, subscription money, etc. After all that, then we will allot the shares or the securities, any security. Shares is just one type of security. So we are going to talk in issue of securities chapter 20 only about the offer. We are not talking about acceptance. We are not talking about allotment of shares or security. So there are so many rules relating to offer, because you cannot make false claims. You cannot say our company will grow 10 times in 2 years. All those false claims are not there. So your prospectus is very, very important, and you should make sure everything is pakka and everything is proper. Along with that, newly they have added SME exchanges. So we study in this issue SME exchanges, small and medium enterprises. If they want to raise, let us say, some 10 crores, 20 crores, this is a great opportunity under SME exchanges. This is a great area for company secretaries also in future to work. So that is why they have added this, and you should study this in detail. Next we come to chapter number 21. So in chapter number 21 we have regulatory framework for market intermediaries. So in the capital markets part, we studied the market intermediaries like merchant banker, registrar to the issue, underwriters, bankers to the issue, debenture trustees, so on and so forth. So here we will be studying what should be in your mind, when we study the regulatory framework for market intermediaries. So go back to the first video. I told you the 7 points. So in the 7 points, one point is the law relating to the companies which want to raise capital. So in the law relating here, we are studying what is the law for the market intermediaries. So can anybody become merchant banker? Anybody can become registrar, underwriter? Yes, they can, but there are some rules, there are some laws, there are some regulations, and that is what we are going to study in this particular chapter. So what are some of the things that we study in this chapter? We have to understand clearly. So the first thing which we study in this chapter is relating to eligibility. Correct? We studied who is the market intermediary earlier, but now we have to study in chapter 21 who is eligible. Can anybody become? We have to know the eligibility. After eligibility, we have to know the capital requirement. So capital requirement is to become an underwriter. What is the capital required? To become a banker to the issue, what is the capital required? Then we study about the certificate. After all these things is there, we'll study about the certificate which will be issued by the authorities. Correct? And then what are the conditions to ensure that the certificate is valid? Conditions for valid certificate. That means if you don't follow these conditions, you will lose your status as bankers to the issue, debenture trustee, registrar to the issue, merchant bankers, etc. So this chapter is very easy, because though it is regulatory framework and lot of law is involved over here, we are studying what is the eligibility, the capital requirement, etc. And it is easy to remember. So please keep this in mind before you study the chapter number 21. Now we will be going to chapter number 22, which is nothing but insider trading. So insider trading is something which everybody has a basic idea. So here any question relating to this chapter, you please write there should not be unpublished price sensitive information which goes to the public. So unpublished price sensitive, that means the information which will change the shares price of the securities price. Unpublished price sensitive information. This is something which you should write for any question relating to this particular chapter. So what is unpublished price sensitive information? It amounts to insider trading, because if anybody, suppose I am the director, I know that tomorrow we are declaring dividends. So today I will tell all my friends, buy the shares, the price will go up. So that is illegal. What I have done is illegal. I will be considered as a white collar criminal. So it is a crime for doing this activity. It is as good as murder. So it is a very serious offense. So here when we study in this chapter, we study a little bit of the history. That is what is insider trading, why it became, why we had to have a law, because if nobody cheated, we didn't have to have any concept. Then we study the SEBI regulations relating to prohibition of insider trading, how we have to prohibit it. Then the most important definition, again important, which you have read in exam, is the concept of connected person. So in this chapter you study this definition very well. Connected person, you can write any answer. So you know unpublished price sensitive information and connected person. You can write this answers very well. Then we come to chapter 23. What should be in your mind when we study 23? Takeover code. Takeover code. So overview of the takeover code is what will be there in this particular chapter. So this chapter was not there for example when I was studying, because in the last 10 to 15 years there have been lot of hostile takeovers. So hostile takeover is without the permission, without mutual consent. It was just through the market access, and for buying the shares through the open market, one company will take over another company. So that is called as hostile takeover. Without your knowledge, your company is being takeover. So that is why the takeover code is introduced for preventing hostile takeover. That is the main thing. So if you have this in mind, everything else, all the rules will start becoming very easy. It will start making sense to you. So why is takeover code chapter 23 there? First point, to prevent hostile takeovers, and the second point is to give opportunity to exit. To whom? To the innocent. So there is a concept of innocent shareholders. So I'll give you example for this. So suppose there is a company, okay, Reliance. Then there is one more company here, Tata, just for example. So if Reliance we call here as acquirer company, and for Tata we call it as the target company. Okay, so acquirer company and target company. So acquirer company wants to come and acquire the target company. So I am a innocent shareholder here. Okay, so I don't want. So in this takeover code, I don't want to become part of this Reliance. So I have been given an opportunity to exit. So that is why this law is there, and then the acquirer company will have to give me a chance to exit because the law says so. Then what else should be in your mind? In this chapter we study the different procedures aspect for the acquirer company and target company. So don't forget this acquirer company. I already gave you example. Then target company. So these things are something which you should remember and know very carefully, and that will make you understand what is this particular takeover code. So if you have this in mind, it is sufficient for the time being. Then we come to the last chapter in CMSL. So it is a long 3 video session. If you have watched it, if you have come this far, congratulations. The last part is investor protection. So this chapter, investor protection, it was there when we were all studying, but it was not such a big chapter because investors were not having so many problems which we are having today. So today, the first and foremost, in fact the only objective of SEBI, stock exchange, securities market, and the country as a whole is for investor protection, because there have been lot of frauds. Recently we had the Nirav Modi scam, then we have Vijay Mallya, then we have the Sahara. There are so many scams, one after the other, where investors are losing money. Sharada chit fund scam, so on and so forth. So in this chapter number 24, investor protection, what will you have to keep in your mind? So ensure that investors are aware of the transactions. So we should ensure, what is the reason to ensure investors are aware? So awareness is important. What should they be aware of? They should be aware of the transactions of the company. As an investor, suppose tomorrow you invest, you can invest even 100 rupees tomorrow in some company, correct? If you have a demat account, so it is your right, it is the right. So this chapter is all about the rights. Okay, apart from rights, it's also about responsibilities. Then the investor should be aware of the affairs of the company, that is what is happening on a day-to-day basis. And then you should know basically things like what is the responsibility, and in the exam many times they've asked about this investor grievance redressal mechanism. Investor grievance redressal mechanism. So that is the SEBI related concept where investor grievances are handled carefully. Then the last thing in this chapter which you should keep in your mind is about scores. So that is the complaint redressal scheme. So if you have any complaint, you can go to the SEBI complaint redressal system that is called as scores, and you can do it. For you to understand in a simple manner, suppose you have some problem with your telephone operator. So suppose it may be Airtel, BSNL, correct, or it may be Vodafone, whatever idea. So you will call them, correct, you will call them, I am not getting the mobile data properly, my connection is not correct. So same way, if you are an investor, you have some problem, you can complain to on the website, which is the scores. So this is the brief overview of investor protection. So I hope you understood what you should keep in your mind. So again, I'm telling you, this is not a revision class, or this is not for you to have a alternate to the classes of CMSL, but this is to make you understand what should be in your mind when you are studying this particular concepts in our securities laws.
I hope after this video you got an image about what is capital market and security laws, and also about each chapter what is the overview. If you like this video, please hit the thumbs up icon and also share this video with your friends. And if you want to support us, please tell your friends about this channel and ask them to subscribe. And for more videos, follow us, Ekcel Academy, your one-stop solution for CS course.